Alright, so in this lesson we want to look at some practical questions from the IAS 16 PPE. We've already looked at the understanding the theories, the initial measurements and the subsequent measurements of IAS 16, that is PPE. So in this video we just want to look at how to solve a full practical question. Please, the question link will be in the video description, so you can get access to the full question in the video description. So kindly check the description of the video to get access to the question we are just about solving. So in the question we were told that we were given the statement of financial position for 31st December 2013. Under the following headings we have land and building, we have plant and machinery, and then we have computer. So we are given the cost. The cost here was 1,500,000. We have the cost here to be 340,500, and then we have the cost here to be 617,800. And then we were given our accumulated depreciation over here to be 600,000, and here too we were given it to be 125,900, and then here we were given to be 505,800, and therefore our carrying amount was 900,000 over here, and it was 214,600 over here, and then here was 12. Alright, so under normal circumstances, these values will be our carrying forward, our brought down in 2014. So this financial statement was presented to us in December 2013. Remember that since 31st December it becomes the opening in 2014. Now let's look at the question. They said the accounting policies is as follows. We have depreciation provided to be 2% per annum for the land and building, and 25% on reducing balance for plant and machinery, and then 33.3% straight line on for the computer. We were told that during 2014 the following transactions took place. Now let's look at the requirement of the question before we look at the individual statement. It said produce the analysis of property, plant and equipment as it would appear in the note to the financial statement of RONAS PLC. Let's say the name of the entity is RONAS PLC. So here that's the requirement for the year ended 31st December 2014. So please, our year of concern is 2014. Anything from beginning of January to the end of December 2014 is our concern. Anything before or after is not our concern in this particular question, because the statement said we should look at the analysis for December 2014. Alright, and then the accounting period also starts from January, so we are looking at this January to December 2014. Now let's look at the first. They said on 31st December the land and building were revalued to 1,750,000. Of this amount, 650 relates to the land, which had originally cost 500,000, and the remaining useful life of the building was assessed as 40 years. The remaining useful life was assessed as at that date as 40 years. Please, let's look at where the revaluation is done. The revaluation is done on the day we are preparing the account. They said on 31st December, and they said this information relates to 2014. So, and they said 31st December 2014. The revaluation is done in 31st December 2014. Let's take note of that. And then they said a new machine which had cost 80,000 and had accumulated depreciation of 57,000 at the start of the year was sold for 25,000 in the first week. All our values will be in dollar sign. So the two we are saying is just for you to determine the gain or loss on disposal, and this asset is basically relating to this category of PPE, that is proper plant and machinery, because they said the machine. Let's look at the three. They said a new machine was purchased on 31st March 2014. So in 2014 we have purchased a new machine, and the purchase price we have discount, delivery cost, and the rest. And then fourth, on 1st January, it was decided to change the method of providing depreciation of computer equipment from the existing method to 40% reducing balance method. So that is it for option 4. So this is the question we have. We should provide analysis of PPE. So let's take the first thing. So you take it. When you are giving such questions, don't panic. Take the options, the additional information one by one, and look at what you are supposed to do in there. So the first thing is to determine revaluation gain or revaluation loss, because we were told that our land and building was revalued. Now the question is, when was the revaluation done? The revaluation was done on 31st December 2014. The question only provided us depreciation from whatever they bought the asset, whatever they bought the land and building, up to 31st December 2013. So we need the depreciation in 2014. Please, in the theory video on IAS 16, we remember that we don't depreciate land. So I said it in the video that anytime you're given a question on land and building, they will tell you the portion for the land, and you probably can determine the portion for what? For the building. So they said the land. So here we are looking at option 1. We are looking at option 1. They said the land originally cost. So the cost of land. The cost of land is we are looking at it over here. The cost over here. So item. So here the cost of land was 500,000, which simply means that the building will cost us 1 million. Why? Because they said original cost is 1,500,000. So if the cost of the land is 500,000, then the land will cost us 1 million. So here it is the land that's what we depreciate. That simply means that all these 100,000 here relates to what? To the land. Why are we doing this? Because the revaluation was done on 31st of December 2014, not on this date. So we are supposed to determine the carried amount on 31st December 2014, but they have given us only the carried amount up to what? 2013. Remember that we compare carried amount with what? With revalued amount, not any other thing else. So here, let's look at our annual depreciation for the building. So annual depreciation for the building is going to be the 1 million. There was no residual value divided by what? So this is in case we multiply by 2%. By 2%. So if you do this properly, you are going to get here to be 20,000. So this 20,000 here will have to go to your P&L account as a depreciation, because it relates to what? 2014. Then what will be your accumulated depreciation on the asset? Accumulated depreciation on the asset is going to be the one that they have already calculated, which is the 600,000 plus your 20,000, which will give us your 620,000. So that's accumulated depreciation on the land and building. And therefore, our carried amount after that date is going to be the total cost. Now we are going to take the original cost, which is the 1,500,000 minus about 620,000, and this is going to give us an amount of $880,000. There's another way to also do this one to get the same 880,000. You're just taking your carried amount and less the year's depreciation from it. So if you take 900,000 and less 20,000, probably you get this amount. Now, what is our revalued amount in the question? Revalued amount in the question is $1,750,000. So we compare these two to get a revaluation gain of $870,000. So that is basically for additional information. One, our revalued amount is greater than our carrying amount. So please, this is how you go through to get the revaluations of loss or gain for one. Please, the reason why we are doing this is because of what the year given to us. We were told that the asset was revalued on 31st December 2014, not any other date but 2014, and that's the same date we are preparing was our account. So in that date, we don't need any subsequent depreciation. So the 40% remaining useful life is just there for you for subsequently depreciating the asset over this cost of 1,750,000. Now remember that after revaluation, the new cost becomes the revalued amount. But here, our year of concern is the same date. It's not 2015. So we don't have to charge any depreciation on this 1,750,000. That is it for option 1. When you are done, you do the analysis together. You compile all the analysis together. Alright, so let's look at option 2. Option 2, the machine was sold and this machine will cost us. So here let's look at gain or loss on disposal. Gain or loss on disposal. So here let's look at proceed from disposal. What's our proceed from disposal? Proceed from disposal. So let's have them into. So proceed from disposal, we were told that the amount was sold for 25,000. So basically that was 25,000. Sorry, we are using dollars, not cities. So dollars. Was there any cost to dispose? So the cost to dispose was 0. So cost to dispose was that. So here you have our net proceed to be 25,000. Now what is the cost of the asset? The original cost of the asset was 80,000. What is the accumulated depreciation? Accumulated depreciation was 27,000. So if you less this from this, you get a carried amount of 23,000. So if you take this one from this, we are going to get a gain on disposal to be $2,000. That is our gain on disposal. So we are also done with option 2. But after that date, we are supposed to determine the depreciation of the plant and machinery, and they are using what? Reducing balance method. So now let's look at depreciation of remaining plant and machinery. Okay, so let's have our costs over here. Sorry, our currencies are over here. So the original cost of the assets, is there 340,000. Let's have it to so let's have it at 340,000. No, let's bring it in 340,500. 340,500. That's the original cost of the asset. So here we want to look at the depreciation on remaining assets after the disposal. So they have disposed some. So out of this total asset we have here, one asset or one machine has been disposed of, and here we have determined the cost, the gain or loss on disposal. Therefore, that asset must be removed from an entity because it has been disposed of, and this was done at the beginning of 2014. So therefore, we have to first take it from the asset before we can charge depreciation on the remaining, because this is being done at the beginning of the period. So here we are looking at the depreciation on the remaining machines. So let's have 2 signs over here. So the original cost of the asset is 340,500. Then the one we have sold machine was 80,000. So we take it from this one. So if you take it from this, you get 260,500. So this is the amount left after the disposal. Please, the depreciation method was straight line. So it was a reducing balance method. So we cannot charge depreciation on this cost. You have to charge depreciation on the carried amount. With the reducing balance method, we charge depreciation on the carried amount. So you cannot charge it on this one. So let's look at the accumulated depreciation. That is the original accumulated depreciation. The original one given to us over here, which is what? 125,500. In the question, it is 125,900. 125,900. Oh, sure. 125,900 over here. Then we less the accumulated depreciation of sold assets, or sold machine, and that is 57,000. Why are we doing this? We are doing this because the machine was taken out, and this accumulated depreciation also includes the accumulated depreciation of the machine that was sold out, and therefore must be taken out, so that we can get our carried amount of the remaining asset or the remaining machine before we can charge depreciation on the carrying amount. So in this case, quickly, 125,900 minus 57,000 is going to give us 68,900. So this is the accumulated depreciation of the remaining assets. So here we take this one from this to get the carrying amount of the remaining asset, because depreciation is charged on the remaining, the carrying amount, because this is a reducing balance method. So we take this from 260,500, then we charge depreciation of 25% on it. So we have 260,500 minus 68,900, and this is going to give us 191,600 as our carried amount. So we charge depreciation for the period on it, depreciation of 25% on it, and this is going to give us, so times 0.25, the depreciation percent is 25%, and this is going to give us 47,900. So this is the depreciation on the remaining assets, depreciation on the remaining. Okay, so now we are done with option 2, or additional information 2. We want to look at additional information 3. In that case, they said a new machine was bought, so you have to determine the cost of the machine, and this was bought. The machine was bought on 31st March 2014. So let's determine the cost of new machine. In this case, the cost of new machine, we have the purchase price over there. So it's in dollar sign, purchase price. And the purchase price in the question is 20,000. And they said included in this was a reclaimable sales tax. Since it's a reclaimable sales tax and it's included in this one, we are supposed to less it. So if you've not watched the video on the IAS 16, the explanation, you can quickly look at that and then watch it. So here, the reclaimable sales tax must be less, and then the amount is 3,000. We have to less it, and then we also have a discount. They said before discount. So if it were to be after discount, they still give a discount. We really have less, but this one is before discount. So you have to less the 1,000 from it, which is a discount. We were told they have a delivery cost of 500. It must be captured. So delivery cost of 500 must be captured. We also have installation cost of 750. Installation cost of 750 must also be captured. And then we also have the interest or loan by the borrowing cost. Borrowing cost must also be captured as 300. So we do this one quickly to get the cost of the new asset. So 20,000. We're going to give it 17,550. 17,550. And remember that this asset falls into the category of plant and machinery and must take their depreciation consent, because the asset was not bought at the end of the period. It was bought during the period on 31st March. Okay, so we have to depreciate it and take only 9 months depreciation into consideration. And since this is the first cost, we will charge the reducing balance of 25%, because this is a machine and it falls under plant and machinery. So the depreciation of new assets is going to be the 17,550 multiplied by 25%. 25% multiplied by 9/12, because the assets we are going to use it for only April up to December in 2014. So you have to take the 9 months into consideration. So this is multiplied by 0.25 multiplied by 9/12. If you do it correctly, you get 3290.63. That is the depreciation on the new asset. If you bought it in 31st December 2014, and we use it from 1st April to December, and therefore we are supposed to capture that. And then we are left with the computer. So we want to look at the depreciation of computer. The computer, we are told that after the as at 1st of January 2014, the useful life and the depreciation method has been revised. So you want to look at the last option, which was so that we were told that the computer useful life has been changed, and that is the reducing balance method of straight line method of 33.3% has been changed to a reducing balance method of 40%. And we know that we charge reducing balance method on the carried amount of the asset. And in this case, remember that anytime there's a revision of a useful life or a revision of a depreciation method, is an estimation, change in an estimation, and therefore must be done prospectively from the day of the change in upwards. So at the day of the revision, the new cost of the asset becomes the carried amount of the asset. So in this case, we are going to charge a 40% on the carried amount of the computer, and in this case is going to give us, that is 40% times 112,000, and this is going to give us 44,800. So that is the depreciation for the computer. So we are done with all the options. Now this are all calculations. We are left with presentation. Here I'm going to use two methods. We will first use the PPE schedule, and we also use the analysis to look at how to account for this. So first, let's look at how to account for this under the PPE schedule using the same approach they have used over here. Alright, so we basically want to look at the PPE schedule. Now we are done with our calculations. We want to present our final figures in the PPE schedule. So this is our land and building, this is our plant and machinery, this is our computer, and this is our total. So first, let's have our cost. So this is as at 31st December 2014. Right, so this is one way of presenting this question. So the cost of the building now is going to be 175, the revalued amount 175, and then the plant and machinery, our cost now is going to be this plus the new machine that we acquired, the 17,550. The remaining cost, the remaining asset plus the new one that we bought will give it the plant and plant and machinery. And if you do that, well, you get 278,150. And then our computer, our cost is going to be the carried amount, which was 112,000. Now let's look at the accumulated depreciation. Here it will be done because the revaluation was done on 31st December 2014. It will be dashed. The accumulated depreciation here is going to be the previously depreciation, this one, plus the depreciation of the remaining one, plus the depreciation of the newly bought assets, this one, will give it the accumulated depreciation of the plant and the machinery. So three depreciations are coming in here. The depreciation, the accumulated depreciation of the remaining assets, plus the new one we calculated in 2014, and then the depreciation of the new asset, because now the cost of the new asset is now here. So if you do that properly, it's going to give you 115,990.63, and then the depreciation here is going to give you the one that we calculated after the revision of the depreciation method, and it's going to give us 44,800. So we are going to let this one and let this one to get our carried amount of the asset. So here we will get the same 1750. Is so because of we didn't charge any depreciation on the revalued amount. So here let's do the computation over there. So we have 1287 minus 2 minus 115, so 287,550 minus 115,750 minus 115,990.63. This is going to give us 162.59, 162.59, and this place we are going to get 2,000 minus 44,800. This is going to give us 6,600.58. 67,200. So we add all this, we add this like this to get our PPE. So plus 162,059.37 plus 1,750, and this is going to give us 197,259.37. So this is our total PPE to be captured in this example. So let's quickly prepare our financial statement. So here you have our statement of income and other comprehensive income. The income statement and other comprehensive income. So here we have income statement and other comprehensive income for 31st December 2014. So first we have to bring our depreciation, and here the depreciation is going to be the one for the PPE for the year 20,000, the land and building 20,000, and the one we calculated here for the plant and machinery, which was the 32 for the new one, and then the old one, and the two, if you add it to, you get 51,090, and then you also have the depreciation here. If you bring all together, we are going to get so we add all to see. So you add this page, we are getting 2, because for the remaining old machines and for the new machines. So here we are going to get 51,090, 51,119.63 for this one, and then we have 20,000 under the land and building, plus 20,000 under land and building, plus the 44,800 under computer, and this is going to give us a total depreciation of 190.115,990.63. And then you have this is expense, we can be in brackets. We have gain on what? On disposal of 2,000 is a gain, so it will be here. And then we go to our OCI account, where you have our revaluation surplus over there from on the land, which is going to be 8,750,000. It's an income. Then we go to our statement of financial position, and that is going to be 31st of 2014. For December 2014. So while you have our PPE, we have done our PPE schedule, so you just bring the final amount 1,979,259.37. Sorry, and at equity you have our revaluation surplus in there, which was the 8,750. So basically, this is the end of the whole question. Remember that the question link will be in the description. There's another way of presenting the whole question after getting all the figures. There's another way of preparing or getting the whole questions. Here we are going to bring all the individual items in the PPE. So in this question, we just captured the accumulated depreciation here, but if it will be the other method, you capture everything that we have done here in the statement. So our gain will come, our disposal, everything will come here, so that at the end of it all, you still get the same answer. So it's the same thing. That's why I said 2 methods of doing that. So you either use this approach or use that approach to tackle this question. So if you have any question, you can leave it at the comment section and it will be attended to. So this is basically the question on PPE. Remember that the question link will be in the description and you can get access to it.